Felix here, and welcome to this pre-morning live. What a drama it was yesterday. What a drama this morning is. And I tell you, literally everything just flipped 30 minutes ago. Exactly. I want to explain to you why. I want to let you hanging in there. It's good news. We have some good news. We have some cautious news. We have some horrible news to learn from, and we'll hopefully round up with a bit of positivity here today. That's what we got in stock here for the next few minutes. Good morning, everybody. And while I run you through the numbers, we just got inflation data out, which was literally the one thing that the whole thing here was hanging on. Let me ask you a question. How much money do you think you're losing or have lost because you don't have all the skills and all the tools and all the understanding of how the market works? Do you think you're losing, I don't know, $10,000, $100,000, maybe even millions of dollars? Put it in the chat. I'd love to see where you think you are at in terms of losses, and we'll circle back to that in a minute. And by losses, I also mean like just leaving opportunities on the table that you could have spotted, right? That's also a loss, right? Because someone else took it, therefore you're poor already. But let me start with the good news. I don't want to leave you hanging here in the misery of the doom and gloom from yesterday. Things are improving, which is nice. Core PCE, which is the favorite inflation metric of Jerome Powell, came in at 0.1%. We were expecting 0.2%, so it is lower than expected, and that is good news. Yes, very good news. We also have personal income, a little lower than expected. From a Fed point of view, slowing economy, that is also good news. Because why? It's slowing economy means less inflation. Spending came in a little bit softer as well, 0.4. We were expecting 0.5. That's a little bit lower. So that's the third smiley here. And then on the month-on-month headline numbers, again, you can see 0.1. We were expecting 0.2. Overall inflation coming in a little bit lower. So we got smileys all around us. They're everywhere I go. And what does that mean? Well, most people don't really understand what these numbers mean, right? I mean, put your hand up if you don't know what those numbers mean. I used to not know what those numbers meant. I was like, and I'm an economist, and I was still like, how does that affect the stock market? What do? Well, go to TradeVision, open up QQQ, because it's the most rate sensitive, most news sensitive thing out there really, and change the day chart up here from 1 day to 1 minute. And then all you got to look up is like, well, when did the data come out? The data came out at, I'll show you, at 8:30 a.m. New York time, Eastern time. Data always comes out at Eastern time. And then you have a touch of patience, and it'll show you exactly what's going on out there. So where did the data come in? Came in here at 8:30 there, right? And what did you see? Sorry, can I move that to the left? There it is. So we started here at about $507 and we moved up immediately by 3 points. That tells you the market thinks it was a good thing, right? And if the market thinks it's a wonderful thing, it'll go up a lot higher. If the market thinks it's a terrible thing, it'll go a lot lower. So that's basically your answer to, is this good news, is it bad news? It's good news. So there is, however, more that, again, most people don't really understand. The red jacket is heartbreaking, is it? Interesting how much money some of you guys are thinking you're losing. $3,000, 40%, hundreds of thousands, 100 cases, George in here, 100K at least, million, says Alex. Today, 15,000. Interesting. Okay, so you feel that pain of the not understanding, not knowing. Okay, let me give you a little bit of data then to make you better informed today and going into next week, so we know what the heck's going on out there. And I'm watching my portfolio here like a hawk. It's still all red, but it's not as bad as it was just half an hour ago. So things are improving slightly. This is an interesting bit of statistic. And generally when people use the word interesting, they use it to describe something terribly dull. This is something terribly dull. It's the job finding rate of unemployed workers. It's very hard for unemployed workers to find jobs when there are no jobs. So typically what happens as you sort of head into recessions, it becomes hard to find jobs, The great bit here in the background are recessions. And what happened just now? It's absolutely being decimated. So what does that say to you? There are less jobs available. And what does that say to you? That a labor market recession is in the offing, and therefore Jerome the Magnificent Powell will likely cut more than he just told us. Okay. Particularly if you take that together with the inflation data we just got in, we've got two good reasons for him to flip on what he said only 2 days ago. Now, to get back to all of you who are saying you're losing tens of thousands, hundreds of thousands, maybe even millions of dollars, what do you need to learn to do? You need to learn two things, really. You need to learn spot opportunities, because every single day there are opportunities. There are always opportunities to make money. And you want to identify the really good ones, right? The really good ones. And then you want to make sure that you take profits on nearish the top of your rally, and you want to make sure that those profitable trades don't avoid large losses, right? If you master that, those three simple things, you will do better than 99% of all investors out there. And those numbers you're putting out there, the thousands, the tens of thousands, the millions that you think you're losing will disappear. So how do you do that? Well, you can get started by learning how to spot opportunities, by learning how to take profits, and how to avoid large losses. I promise you all of those three things if you watch the masterclass. And I'd watch it right now. I just leave the live stream, not worry about today or tomorrow, because none of that really matters. What really matters is the medium term, where you're really going to make all that money for yourself and your family. And in all honesty, you're not going to do that by watching this video. This video is going to make you better informed for the next couple of days, but it's not going to change the way you invest your money. The masterclass is going to do that for you. And it's free. It's half an hour. You can take notes. You can rewatch it, and then you'll be smarter. And then you can come back live here on Monday, and you'll be like, Felix, I watched it. I'm smarter. Now give me the news and give me the opportunities, right? TradeVision only has 4 buys today. That shows you how bearish we turned, right? In a very, very short period of time. Dana says, I watched your masterclass last night. It was really great. Learned so much. Thank you. I appreciate you. Which is brilliant. Did I lose money today? Well, yeah, let me show you. So I run this 30K portfolio, right? It's a teaching portfolio, and I run this sort of a little, fairly tight to the wall. So we got some margin calls here this morning. We're actually not using any margin, but it's just that VIX straight here. I need to close that VIX straight. If I close that, then everything goes away, which is what I'm doing right here. But overall, are we doing all right? Well, we're up 125% on the open trades. We lost a little bit on the Tesla, on the PayPal, and the SoFi, maybe 20% off or so. On Bitcoin, we're down 8%. But we're up still almost $40,000 on a 30K portfolio. So we're doing reasonably well here. So I'm not particularly concerned about any of that. I also have a stock portfolio, which is also up still very, very nicely. So it's about risk management. That's really what it's also ultimately about. If you change your mind about taking the masterclass down, says René, I'm definitely going to change it up. That's for sure coming. So the current form will probably disappear over the weekend. So if you haven't already, go watch it right here, right now. What happened to NVO? We'll get to that as well in a second, my friend. That's actually literally on my list here, on my whiteboard, blackboard. But before I get into that, just quickly, this is a super, super important thing to understand. That again, the only people I know who talk about this are professional traders who work for big banks, right? Hedge fund outfits and so on. And what happens? There is a little thing called buybacks. Basically, companies, so stocks, right? So listed companies are the biggest buyers, the bigliest buyers of what? Stocks. Sounds weird, right? Apple buys back like 90 billion a year of its own stock. So they reduce the amount of shares out there by like 90 billion a year, massive amount. And then everyone's doing that. PayPal's doing that. All the big companies are doing that. But during earnings season, they're not allowed to buy their own stock just before they report earnings. So you have these blackout periods where they can't buy stocks. So what does that mean? It means the biggest buyer of stocks is removed from the market. It's like sent to a desert island and you've taken away his phone. And that kicks in when? Here. When is that? What's the date today? Today's the 20th. Kicks on today. So today, that little lifeline of just the ever permanent buying goes away. And that's going to get worse. So today, about 40% of companies have to stop buying. And then that increases as we go into mid-January to like all of it. So this period is therefore potentially a lot more volatile. And this happens once a quarter. So it's a very, very predictable thing. And I'll always tell you when it happens. But if you know that that happens, you know, okay, stuff's going to move a little bit more freely in this period. And Mr. Tan there, I appreciate you enjoying that masterclass as well. That's absolutely brilliant. That's precisely why I made it. So yes, it was incredibly insightful and elevating, inspired by your life story, and hope to be able to replicate a similar level of success. You can, my friend. Anybody can. Anybody can. It really is just a question of, it's a knowledge gap, and then it's an application gap, right? So how many people right now are, do you think, sitting around and they're watching some, you know, brainless thing on YouTube or a bit of pointless Netflix or something, right? And then there is you, the elevated 3000, who are actually here to listen to pretty in-depth stuff about the stock market and try to learn how it works and understands and spot the patterns and go away and watch the masterclass and reacquire some skills, right? And that puts you in a very elevated league of people who are serious about making your investment journey and your financial freedom journey a real thing and making your life a success. And what do I mean by success? Well, success to me is a very simple thing. Control of your time. Because if you can wake up and you decide what you're going to do today without anyone breathing down your neck, without worrying about paying for bills, without having to go to a job, without an alarm clock, right? Okay, I have an alarm clock. It's a kitten. It's a kitten and she meows at 6:45, but that's a voluntary thing. But, you know, not having to hit that snooze button, or being able to hit the snooze button if you do have an alarm, I don't. That's really success to me. And you can get there. How do you get there? Well, you got to build wealth. How do you build wealth? You got to make your money work for you. That's really the only way, because the alternative is just to work really hard, in which case you work really hard, but you have no time freedom. And without time freedom, what happens? You're just a worker bee, right? You're making someone else rich, usually. That's not really the goal here. So let me give you another very important golden nugget here. This is kind of golden nugget number 3 or 4, I think, so far. I lost count. I think it's 3, isn't it? CTAs, algo funds, what are they up to? Well, they're also very big buyers and they're very big sellers. And what happens when they sell? Well, they sell a lot. What happens when they buy a lot, and it influences the market. And this is from Goldman Sachs here. GS stands for Goldman Sachs, one of the biggest, probably the most respected investment bank out there. And if we go flat for the month, they're selling 24 billion. This is a lot, but not that much. If we go up, they're still going to sell 2 billion. So they're not being very supportive of this rally. Why? Because they've already bought everything that they can kind of buy. But if we go down quite a bit, they're going to sell 60 billion over the month. Now, over the week, it's not that much, 14 billion, but over the month, it's quite significant. So if this off the cliff move continues, and at the moment it's improving slightly as I'm looking here at the charts, if we close redder and redder and we break through the key support levels on the S&P, and you might want to write this one down, S&P 500, 5722, that's the key support level here. And if I open up the S&P chart here in TradeVision, and you might want to get yourself a free trial to TradeVision as well, just write that down, felixfriends.org/TradeVision. The link is down here, felixfriends.org/TradeVision. It's also in the description down below. And so in the short term, we have here this support at 5,800. That's important, right? Up till there, we get some support from the market. But if we drop a little lower, and according to Goldman Sachs, that's down here at 5,722, at that line there. I'm going to put it on the chart for you, so it's really, really clear. Okay, this is important. 5722 below here 60 billion. What happened? Below 5722. 60 billion of CTA cells. CTA stands for computer-driven nonsensical funds. Why is it? Okay, there we go. So that's an important line. So if we see us moving towards that and below that, you know what's going to happen. This sell-off push is going to start, and it's probably going to drop a little lower, right? So that's important information that you now have, and hopefully we don't go there. But you're equipped with what you need to do then. And I always think you got to be prepared for the worst case scenario so that when it happens, you're chilled and you're still making money, right? Guinea pigs say the TradeVision is great. Support and resistance lines are a great tool in the golf bag to have. Yes, absolutely. I agree with you. And we're also going to have them historically soon. And we're also adding a ton of other amazing stuff in there right now, which is going to be very, very helpful. Tighten up your stops. Yeah, make sure you've got stops, right? And then actually, funnily enough, I've got some IWM, but just small caps, and I was thinking about that this morning. I was like, that's 8% down. How's that possible? My stops are usually a bit tighter than that. And I'd set up a stop as a day order, so it expired that day. So always count how many orders you have, how many stops you have, and how many positions you have. And let's get a match. If you're missing one, find the missing one. So that's really, really important. Now, here is a live lesson in what not to do. This is Novo Nordisk, right? Which is the fat loss Ozempic manufacturers, for the clientele who say, I'll try anything to lose weight except eat less pie. So that's what they're saying, and it went on a really, really nice kind of upwards rally here. Look at that. That was the rally, right? Absolutely beautiful. And what then happens? Well, people still kept buying it. And then, it's going down. It's getting cheaper. I'm going to DCA down. I'm going to discount out. It's amazing. Look, I love Ozempic. It's getting cheaper. I'm still buying it. I'm still buying it. I'm still buying it. And now what happened? Dropped like 12% this morning here. It's now trading here. Was it such a good idea to buy all along on the way down? Was it? I mean, okay, in the long run, maybe it's fine, right? But in the long run, we're all dead, right? It's not really the goal here. There are two things here that you could have spotted, and there's definitely one thing I teach you if you watch the masterclass down below. That means you would never be in that situation. That would be get the frick out of your position here. Okay, that would be the first thing. And then there would have been another one here, somewhere here where the moving average line was. And then for the slightly more ambitious of you, let me draw this for you. What do you see? You see an M? Yes. It's called a head and shoulders pattern by the market. This is a shoulder, this is a head, and this is a shoulder. Nostradamus calls. And then it also has what? It has armpits. It has an armpit there, and it has an armpit here. So what do? You draw a line, you connect the armpits, okay? Then continue that line. When you drop below that line here, what do? You run for the fucking hills. And there is no question about it. You know this thing is going to go down. It's going to go down hard. And you know what it's going to do? It's going to go down. And then it's going to give you a false rally up. It always does it. And that's going to happen on so-so volume, and it's going to fail. It's not going to break through that line again. And then it's going to dump on you really, really, really hard like a ton of bricks. And that's exactly what happened. And if you understand these simple patterns, I know this looks a little complicated, right? It's the first time you're looking at it, it's a bit complicated, but it's always the same thing. Like I've seen this 1,000 times. It's always the same thing. It happens every time. And if you know that, and you have the discipline to put in those stops, then this doesn't happen to you. It just doesn't happen. Like there's no need to lose, 12% in a morning, on a fat loss drug. It's just moronic. And by the way, why did it drop? They got some new product out that did a clinical trial, and it's you're losing weight less quickly on it than they were hoping for. Okay, anything but stopping the cake. Nike, similar story, right? Went up beautifully into the beginning of 2024, right? Nice rally up here, somewhere like that. Can we get a straight line? And then what happens? Big drop here, right? So at the very least, you should have sold that. That was like the screaming warning flag, exit, get the hell out, you know. The white flag is waving, we were abandoning ship. And then even if you had missed that one because you were, you know, in a coma, say, then the next one would have been here. That gap down, you would have been like, I'm definitely getting out of this, right? And then the moronic thing that starts to happen is that as it drops again and it recovers a little bit, people are saying, it's a bargain. It's a bargain. Go buy it. Well, look at that drop here today after earnings, right? And I'm not saying that Nike is a terrible company forever. I'm just saying that between January here and now December, a whole year went by and you lost what? 50%. So you are minus 50% and you say, okay, it's going to go back up to zero. You know, eventually it'll go up, maybe another year. So now maybe you're looking at 2 years and you're back to zero. Well done. What's the market going to do in those 2 years? Well, this year, the market's doing 30%. Next year, my guess would be it might do another 20%. So you are losing 50% gains in that period. 50% gains, and that's an S&P market move. This is not a stock picking trading like, you know, you might be able to do, you know, we're up 200% this year, right? You are 50% poorer by being a freaking bag holder and not respecting exit rules because somebody told you buy and hold is, you know, the most brilliant thing you could ever do. Who tells you that? People like Buffett. What does Buffett do? Freaking trades in other positions every other day, right? Bought some more Oxy today. And the thing he thinks he holds forever, he basically takes over management. He puts in his own people. You're not doing that because you haven't got hundreds of billions lying around. So you always got to think of what's the thing they're teaching and what is the thing that they're actually doing. Right? So maybe enough of a rant here for the moment, but yeah, watch that out. Will there be more panic if the government shuts down today? I thought everybody would feel rather happy if the government shut down, wouldn't you? I'd be rather happy if the government shut down. Government shutdowns are a bit of a myth because the essential services continue. The only risk is that with government shutdowns, the banking sector in theory runs out of funds. But in reality, they'll fix it. They'll fix it at 3 a.m. on a Sunday or something. So would I be worried about that? No. And honestly, have you seen the pictures of that bill that they were going to put out there, right? There was a bill that was 1,500 pages. 1,500 pages to basically keep the government running till March. Why? Because it's stuffed full of every self-interest, every lobbyist in the world got their little handout. And that's why the government, the US government, wastes so much freaking money. So I think it's a good thing that they're fixing that. I hope they're going to fix it. So here's Buffett. And he's an amazing investor, don't get me wrong. But he's in a very, very different position to you and me. He's got massive amounts of money. So he has to buy massively large companies because otherwise he'd gobble up the whole thing. And typically what he does, most of the money is in insurance companies, which they essentially run themselves. And then, okay, they take large stakes in certain companies, but most of the time they have controlling stakes, right? Or near controlling stakes. And for the stuff that they don't, what's the holding period on average? I might be slightly wrong on this, but I think it's about 8 years. So it's not buy and hold forever. It's just really understand a company, really dig into the financials, find something fundamental. Then you sprinkle some Buffett dust over it, which in itself causes the stock to go up because everyone wants to buy what he's buying. And then you pump it into the ecosystem of the Berkshire Hathaway companies and the support and the access to banking, and you introduce them to cheaper financing and, the guy who gets the permits. And that's the benefit of it, right? You get this ecosystem. So it's a lot more than just you and me buying a couple of shares. It really isn't the same thing. So if you want to buy Buffett stocks, all right, you can certainly do that. Definitely worse stocks to buy, although Oxy's been a disaster so far. Then it might well recover. It might well be a brilliant buy over a 5-year time period. But they don't buy and hold forever. They just don't. They acquire and they keep that, but you can't do that. So all right, so there we are. What about AMD leaps? It's a falling knife, my friend. What did I just tell you about back holding? What did I tell you about Nike, right? Buying it because it's cheaper. Well, when stuff gets cheaper, it typically gets a lot cheaper. So buy stuff after it started rallying, not before. Right? That's what you want to do. You don't want to get into stuff too early. It's a terrible idea. It's terribly expensive, and it ties up your capital, and therefore you can't do anything. You're not making any money, and you're losing money while other people are making money. Now, here's something a bit more cheerful. This is pre-market. Well, cheerful. It was worse. That's what I'm saying to you. So if you look at something like Tesla here, say, and we look at some of our favorite tech stocks here as well. And let me show you the minute chart. So what happened? We were down a fair bit. We're down to here sort of $410 down here. Bear in mind, supports it's at 425. And then here at 8:30, the inflation data comes out, and now we're back to 427. So we've gained $17 on Tesla here pre-market. So that's pretty good, right? So yes, I was going to close my Tesla position, but that's because we were down 4.7% pre-market. Now we're down 2%. So as long as we're above the support, for me personally, I'm good with it. But then we are up, we're up 199%, which just means I've got a little bit of buffer there. Like, it doesn't really matter that much if it moves up or down 10%, right? But we definitely want to make sure that we don't give up all of our gains. That's the biggest mistake I see people make again and again and again, and it's just so avoidable. It's so easy. Any words of wisdom for new investors panicking a bit in this crash? It's not a crash. It's a minor blip. And isn't it nice when stuff's cheaper? That's the way you got to look at it, right? So stocks get cheaper. It's a brilliant opportunity for us. Actually, if we had a major crash, it'd be the greatest wealth generator opportunity possible. So I force myself, and you have to force yourself, to look at it and go, brilliant. So what do? We have stops. We take profits with the stops, right? And then when it rebounds, we buy more. And in the meantime, we just sit on our hands. That's the most important thing to do as an investor and as a trader is to sit on your hands. Explain triple witching, says Raft. Basically, options on stocks, futures, and index options expire today. $26 trillion or some silly number. Doesn't really matter what it is. Largest options expiration ever. It always is every month. And what does that mean? It means you're going to see a lot of trades in the last half hour of the day. So if you have a position and you're feeling a little bit dodgy about, you might want to get out of that, because you can see the potential for very large moves are there in the last hour of the day. It doesn't mean it's going to go up or it's going to go down, but you get those large moves, and that's definitely something you don't want to do. So I would be a little bit cautious on that. So okay, market's open. My VIX trade is closed itself, which was a short call, which was a remnant of a trade, which just got me these margin calls here in the account. But there is actually positive cash in there now, and now our buying power is positive again, both options and stocks. So that should go away now. Just you don't want to be short calls. Generally speaking, it takes up too much of your account. I've only been trading for a month. Very painful, says David. Sorry to hear that, my friend. Well, you've probably had a very nice run up, right? If you started in that month, and that's a good thing. So what's the lesson you've learned here in your first month of trading? You need stops. You need to automate the exits, because it's very, very hard to press the sell button, right? Very hard to do. And you'll get used to it over time, and you'll appreciate its importance. So you got a cheap early lesson here. Because if you got that lesson 2 years later, the worst thing is people start trading. It's a 2-year bull run. Then, the knives come down and it crashes 50%. People are really unprepared because they've never experienced anything like it. So these little blips, I think, are really there to remind you that risk management is where the money is made. And that's ultimately what it's all about. So let's look at a few more stocks here as the markets open. Tesla's down 2.3%, which is better than the 4% it was just now. Let's have a look at Palantir. Do you use trading stops? Sometimes. They're not my favorite, but I do sometimes on options trades, particularly. Palantir is down 2.6%, but it's at $72. So just look at some perspective here, right? Where are we trading? We're trading basically in the same zone we've been trading at since the beginning of December. So it's neither here nor there whether we're down a few percent. Have a look at, say, SoFi, which is another thing that we're up quite nicely on still. We're still up. I say still, hopefully that's going to last. 228% on that SoFi trade here. It was almost 300. And why aren't we out of it? Because we're marginally below our lows here, but only marginally. We're still above the support line here at 1450, which TradeVision shows us so generously. And you might want to get yourself a free trial to TradeVision so you get that support. So as long as we're above the support here for the moment, I'm good. And also, if I zoom out a little bit and extend my blue trend line here, just do that. We're fractionally below it. It's true. So you might want to close like partially the position. But, it's still above the 50. Like it's all looking still kind of all right. Anything else we should be looking at? Would you still recommend SoFi leaps? No. What determines the price of, how do you know if an option is cheap or expensive? If you're looking at leaps, leap is an option, right? That number there that I'm highlighting, IV percent, that tells you if it's expensive. IV percent goes from 0 to 100. At 100, it's crazy expensive. At 0, it's crazy cheap. So where do you want to buy it? Well, closer to the 0 than to the 100. So at 83, what do? You don't buy leaps. No. You could maybe sell some options if you're a bit more sophisticated, but, I definitely wouldn't buy them at this price. Bad idea. Does TradeVision show moving averages? Yeah, it does. Down here, you can toggle on. I usually have the 50 on. You can obviously turn on the 250, the 200, even the 20. But the 50 is sort of like the key thing. The 150 is also important, I would argue. Some of you are saying, please have a look at SoundHound. I will gladly do that for you. Are you optimistic for SoFi? Yes, I am. I'm very optimistic for SoFi. But, optimism isn't really what this is about. What I always say is it drops below the trend lines, then I'm out. and if I then go back in, well, yeah, when we start breaking out again. So, but I'm not one of those conviction people, because the chart tells you whether there is conviction in the stock. And the chart drops, the conviction goes out of the window, and we exit, take a profit, we put it into something else. So SoundHound here, well, it's trading at the very bottom range of yesterday's trade day. Nothing particularly unusual about it. Same levels we were at 3 or 4 days ago. So I wouldn't be, it's a volatile stock, but it's only down 1.7% today. So. Yeah, this is TradeVision here, my friend. Who's asking that? Callie there. Yeah, exactly. The support and resistance lines show for all stocks where we have sort of major options volume. Otherwise, we don't get the data. Some people are talking about algorithmic mass sales. No, it's nonsense, because the CTAs haven't started selling yet, because we know it. So I showed you the data just. They start selling. Microsoft doing its thing here. Where was it? They start selling at 5722 approximately. So no, it's not algos. There is definitely an element of people getting margin called. That's definitely a thing. But no, it's not algos. It's not algos. Maritza says, I love my TradeVision. So do I. And really good stuff coming up. Excited by that. What does CTA mean? That's a silly acronym. It basically means algo funds, so computer-driven money. So it's just they have rules and they follow it and they buy or sell depending on what's going on there. PayPal, you can certainly have a look at that. Sure. I can tell you it's down 1.6%, which is, you know, not terrible. Tesla is dumping a little bit, and that's down now down 3%. But, you know, not terrible. PayPal here is below its support line now at 85, which isn't brilliant. Now, is it getting dicey? Yes, it's getting dicey. So you see the recent lows here, there, and here, and where we are right now. So that's kind of your sort of final support zone here. And it's always a zone, by the way. It's never a straight line. So you definitely want to have some parachute on this. So we see where this is going. But yeah, it's looking a little dicey. So if it drops a little bit lower, I'll jump out of it, and then we get back into it when we start making money. We've had, I think, 3 or 4 PayPal trades this year. They all made money. And you know, just get out, we get back in. It's all good. That's what this is all about. Joe, what are the next benefits for TradeVision, my friend? The first thing I would do is, in TradeVision, there is a section here called tutorials. Just work through those. It won't take you a huge amount of time, but it basically tells you how to, you know, what it all means. We've got little videos on there, little animations and so on, and that'll help you to actually get real value out of it. So that's the first thing I would do. Saxo Bank, Michael, that is on the list. It's not the biggest bank in the world, so it's not like, I think the next ones coming up are, oh, I don't remember. I posted in, we have an X community. You can have a look up there. I posted the other day what the next ones are that are coming up, but we have just added a bunch of big brokerages, including Webull and Robinhood and Trade 212 and all that stuff. Callie, I think I've answered that. Yes, it looks exactly like. Well, what do you think I'm looking at? I'm looking at TradeVision. So no matter adding SoFi, just when stuff is looking a little bit, you know, it's down 0.7%. I'm not particularly concerned about it. At the moment, it's good. We're up 230%. But it depends on your time frame. I think that's really what I would look at. Crystal, if you're not an options trader, Crystal, then ignore the options chart and just click on this thing down here, which says options, and turn it to news. And that'll be much, much easier for you. And then you don't have to be bothered by the options thing, because obviously not everybody's an options trader, and that's cool. You can just use it as a stock investor as well. Kali, that's okay. Sorry to snap at you there. Max Payne for Tesla. We're only down 2%. It was minus 4% as we started the pre-market here. So I'm actually okay. At 4%, I was gonna sell. At minus 2, I'm holding. So we'll see what today brings. Oh, Crystal, you're an options trader. Oh, okay. Well, in that case, let us know your questions. Put it in the support thing that we've got there, and we'll help you out. In the bottom right corner, there's a little support chat thing here, and you can ping us a message, ask us what you want to ask us, and we will do our best to help and improve also the support, the tutorials that we have. We always want to do that. Looks like everything is trying to rebound. Yes, it is. We are annoying. Do you roll options ever? Rarely. I generally think if I'm wrong, and there's probably something else to do, rather than let's see if the exact same thought is going to do slightly better a few weeks later. It's usually a sort of hopium type thing. So I'm not a huge roller, but I appreciate some people are. Can eToro be added? Yes, absolutely. I think that's in the works. Is the drop of Nova just an overreaction? Probably, but it's been coming for a while. So, you know, I walked through that just. Does TradeVision have Revolut? No, not yet. In terms of European brokers at the moment, we have Interactive Brokers, we have Tasty. I think they're probably the 2 European brokers, and we will be adding more. We'll be adding more. Do let us know what you want us to add, and we'll definitely listen to that. We did a poll and we basically followed your poll, and that's the way we're adding them. So we'll have about 20 major brokerages there within a week or so, I think. SoFi at 15 plus, it's at 14.99 as I'm looking here at my little sort of demo portfolio, if you will. It's still up 121% here. I got margin called this morning, which is it's a 30K portfolio, and I sort of try to run it fairly close to the wind because it's a teaching portfolio. But we've closed the offending position, so we actually are back in the green now. We've got cash, we've got buying power, so I think we're all good. It just takes a bit of time to remove it. But yeah, definitely something you don't want to use. Well, if you're using options particularly, you don't want to use up all your capital because you get these situations. And it wasn't an intentional thing. I'd left a partial position open, which meant that thing got triggered, and that's okay. FOA, says Mark, that's still up very nicely, right? I had a look at that yesterday. It was still up, I think, 170% or something since our buy signal there. And that's a stock, by the way. We're not using any margin or options or anything here. And yeah, it's ziggity zagging a little bit. I'm not too worried about that. Like my stop is down here. It's just sort of below 17. So we're at 24. It's quite a big range, right? But why? Because it's a very volatile stock. And I think there's a chance we might go much higher. So I don't want to get stopped out too soon. And either way, we'll make a lot of money out of this. How do you join the TradeVision community? That's a good question. We actually sent an email invite out, but I appreciate we send a lot of emails. So if you go to TradeVision on X, the account is TradeVision OG. I don't know what does OG stand for? And then there's a community here. And you can also find it on if you go to my X as well, there's also a link to that. So if you go to my account, which is Finance Felix, or just type in my name, Felix Prehn, obviously find the right one. There are always these stupid scam accounts out there. And then here's the community in there. And we post a bunch of stuff in there, but we also post in there, updates, like the brokers that we're adding here. Like these are the brokers that we've now added, for example, and what's coming up, and the occasional meme. We have some fun here. I just posted, for your options nerds, custom strategies coming up shortly. So we're working on that. That'd be very cool for your options traders out there. Do you have a preference for large versus small, growth versus value? I think growth will do well in 25. I think large and I think small will do well. I think the stuff in the middle, I'm not so sure about. Yeah, that's basically the way I see it. The FDX thing, FedEx is a run out of ideas, so they're spinning off their freight business. Apparently that's going to generate value. I never really understand how these things generate value. If they were that valuable, wouldn't the original stock price be good? So anyway, yeah, it's a bit of I always think it's a desperate move, and management can't come up with a thing except for split out businesses. But yeah. Michael has a sense of self-importance. He thinks he's being ignored. I didn't see your question, Michael. There are 3,000 people live here. It's very unlikely I see every single question. It's called FedUp. Yes, probably. FedEx is a terrible service. Used them in France, stole all my stuff. Don't know if that says more about the French or FedEx, but there we go. Will you be starting a new account in the new year? Actually, my intention is to just, this 30K account that I started in cash account in the end of July. I think 30th of July was the first trade. I think I'll just keep trading that. And the goal is to show people you can turn 30K into, millions. And we'll see how long that takes. You'll be able to see it. And we'll be able to track it in TradeVision. And there's also going to be sharing of portfolios is coming up as well as a feature in here, which I'm certainly looking forward to because I think that'd be rather useful. So I'll keep an eye on and I'll show you everything that I'm up to. And of course, I share a lot more with the mentoring community that we have, where I share charts and so on. But that here needs to update. What's going on there? And that shows like everything is terrible, but it isn't. It's a refresh issue. The French just get insulted again. You mean I called the French a nation of thieves? I wouldn't do such a thing now, would I? Would I? Maybe I would. We'll be dead until it's millions. Well, my friend, stick around. You'll see what we get up to here. But yeah, we seem to be okay. So there we are. You can't even imagine how much money I've lost. But it's a good thing to think about because it's actually very motivating. It's a very motivating thing to get better, isn't it? So as Fox Gaming, my friend says, thank you very much for moderating as always, Fox. I appreciate you. Don't forget to watch the masterclass and actually learn how to build the skills that will help you to potentially make a lot more money and leave a lot less opportunities on the table and you know, not lose money on stupid things. Do you think that Germany is in an economic crisis? I think Germany is an economic crisis. Yes, I think it's a total shit show, my friend. Can we do a 2025 outlook? Yeah, we're thinking about a bunch of things like that. We'll do something like that probably over the holidays. We'll have a bit more time. Senor says, Merry Christmas. Thank you very much. Yes, of course, a happy Christmas to you all. I think we'll be live on Monday as the markets are open. And then over Christmas, I guess there won't be any lives. And then I'm off for over New Year's for a little bit. But I'll keep you up to date with what's going on and my thoughts and so on. Why? Because I love it. I enjoy it. It's a fun thing to do. And you know, investing is a super fun, but it's also quite a lonely thing sometimes, isn't it? Like how many people do you have you can talk to about money? Now I'm actually quite lucky. I have quite a lot of people I can talk to about investing, but it's actually just really nice to hop on a call and, you know, we chat here with 3,000 people and, you know, bounce some ideas back and forth and talk about things. And I'm certainly enjoying it. And as long as you are, I'll be here for you. And we also got something actually very cool planned just after Christmas. So I'll keep you up to date on that one as well over the next few days as we're planning it. And in the meantime, I wish you a beautiful Friday. Tesla is now down 3.9% again. So maybe we'll get out of that Tesla position after all. And I wish you a fantastic day. Keep learning. Watch the masterclass. Link is down below. And I hope to see you on the next one. All the best.